think it probably is, if the truth be told. And Arm is a fantastic British success story based in Cambridge, albeit one that's now has a Japanese owner and is about to list on the New York Stock Exchange. I think that has been a blow to British prestige, and the UK hasn't seen many initial public offerings, but equally a lot of other countries haven't seen that many either, and the de-equitization trend is visible there. I think the question that you raised for what's in it for the private investor is a key one, because we are, in theory, seeing pension funds and indeed local government pension funds being moved into illiquid assets, into early stage companies where the risks are higher. Now, although the Chancellor's line is very much, if you take more risk, you can get higher return, but there is clearly no guarantee of that. And although the Chancellor has made a bold statement saying that this plan will boost pension returns by 12% or £1,000 a year, if my employer was to use past information to guarantee future returns, we probably found ourselves under severe regulatory scrutiny and actually in quite a lot of trouble. So he's possibly taken, I would say, quite a bold step there to guarantee those returns. And ultimately, if higher risk assets guaranteed higher returns, well, they wouldn't be higher risk assets, would they?
Indeed. Russ, I wanted to get your take on how the economy is tracking from here. The other interesting comments that we've heard from Hunt was that the government and the BOE are working together to tame inflation, which I thought was interesting. But what exactly can be done to move the needle in the right way for the UK? Obviously, inflation's been a major problem. The central bank working to address that. What's next, and what is it going to mean for equities?
I mean, the picture is very easy to summarise. If you look at the last 4 quarterly GDP prints, I think they're plus 0.1, minus 0.1, plus 0.1, plus 0.1. So somebody who believes that life begins to the left of the decimal point, 0 is pretty much what we're getting at the moment. So it's a pretty stagnant situation, and stagflation is therefore a concern. Inflation running at more than 4 times target. And the central bank, having been late to the party to deal with this, is now rapidly ratcheting up interest rates, and it's now got to try and juggle inflation, weak growth, and at the same time keep an eye on government debt. Former Chancellor and now Prime Minister Rishi Sunak said that 1 percentage point on gilt yields cost the nation an extra £25 billion in interest. This is one of the reasons why Chancellor Hunt is looking to try and channel pension fund money into investment and to boosting the economy, because the government hasn't got very much with which to operate. So I think at the moment, yes, inflation, if left unchecked, will do a huge amount of damage to purchasing power. Equally, the Bank of England will be desperate to avoid accusations that it's intentionally tipping the UK into a recession, which remains a legitimate risk.